Well, hello, you trader nerds. Welcome into a marvelous Monday. Hope y'all had a wonderful weekend. And it is a week ago that we got smacked by the market. The market smacked us. It knocked us silly. And some of y'all on YouTube have even said, Bobby, you need to take a break, dude. You just need to step away. Just take a break. You are going off the rails. And I agree. I was off the rails, especially on Friday when I was like, look, dude, let's undo a new plan. Let's go back to 2016. Let's do what was working in 2016. And then it's almost like sanity hit me this weekend when I went to the Southern Lady. Now, some of y'all don't know what the Southern Lady is. It's a little restaurant, little greasy spoon in our town. And I love their barbecue sauce. It is vinegary and it's almost like watery. It's not thick at all and it's tangy. And I got some chopped pork with their coleslaw, which is delicious. I could take a bath in their coleslaw. It's so good. And then they got the crinkle fries. And I just sit back and I was sitting there going, Lord, help me. What are we going to do with this trading plan? We've done everything that we can do. We had a good trading plan and then we got smacked by the market and we lost a lot of money. And what do we do? So I basically had this epiphany. And for all of you here, 12547 13 poor, Brad, CE7 Doubt, DB, Don, Dwayne, Edwin, Gabriella, Glenn, Hal, Jim, Jason, John, Lisa, Matt, Jolly Wally, Mike, Mickey, Mo, Paul, Ricardo, Robert, Stephen, Stuff, Thomas, Vicky, William, and yes, here is what I need y'all to help me because here's what I basically said. We had a trading plan, ladies and gentlemen, before we got gobsmacked. We had a trading plan that was on track to probably make 40% this year. Now, that's almost greedy because what we wanted to do this week is we wanted to, where this year is our plan was. Remember, our plan was that we should make 20%. Well, when I had already made 20% on the year, I mean, if you look back at it now, we were pushing it. Remember, I had those 33 shorts that I will never live down, and I should have closed them. I could have closed them when they were a $200 loss, and then they turned up being like a $16,000 loss. I should have done that. But I think that the plan was working, y'all. I mean, I don't think anybody would say, now, this is what we had with Volmageddon last Monday is an event that has only happened, what did they say, once in the last 10 years? It's only happened once in the last 10 years. And you basically
Wasn't it
keep
one of the top five worst VIX spikes ever?
one of the top 5 worst VIX spikes ever, I think what's Tasty's calling it. And basically, we had a plan, y'all. We had a plan that was kicking 40% a year. Now, for us to just throw that out is a little bit on the that's just short-sighted. Now, what we've got to do though is we've got to do something to do a little bit of better job on the hedging. I mean, I agree with that. Now, when in hindsight, if you sit there and go, hey, I'm looking for 20% return and I've already made 20% through the first half of the year, what we should have done is like said, hey man, I on this low VIX level probably need to do a little bit more hedging. That's probably what we should have done, right? So what we're going to do is we're going to make sure that we consult our analysis tools on our platform to make sure that we know what the risk is. Now, I knew what the risk is, but I ignored it. I ignored the risk. So maybe we were doing the 1111 or the 111. Maybe we do the 1111. Okay. And this is just adding a little bit of protection, buying just a cheap put, buy a cheap put, maybe we're selling this at the 10 delta. Maybe we just buy a 1 delta put. And it's going to be cheap, y'all. And you're sitting there going, wait a minute. The 1 delta, Bobby, is 2,800 put. I wanted y'all to see this. If I were to buy the 1 delta, it's a 2,800 put. That's the 1 delta, 1% probability of being in the money. And you're sitting there going, Bobby, that doesn't give you really any protection at all on the 1111. And maybe it doesn't, but I just kind of looked at it on if we look at that put in isolation here on the analysis tab of this platform. And this is just having the one put, right? If you had that one put all by itself, and we had a similar thing that the market went down 5%, 4 or 5%, and let's say that VIX got up to 60, then we would be up $6,500 on that put. So that little put does have a little teeth in it. It does by itself do something, and it does cap your losses from, let's see, let's go back over here. It does cap your losses. Your max loss is $83,000 on that thing. So that's not, you sit there and go, well, 83,000 is a lot. But if we delete that 2,800, what's what it goes to if it goes to zero? Your max loss goes to 223,000. So it does do something. It doesn't do a lot on my buying power here. But maybe in the event that, now we could go up. So here on a 111, we would collect about $1,700, $1,400, $1,400. And if we bought a little bit of protection, let's see what we'd still collect out of 2,800. You don't want to buy a lot of these. So you do this and you would still collect $1,275. Is it worth even buying that thing? I don't know. That's why I wanted to show y'all that put all by itself has a little bit of teeth. By itself, if it were all by itself, it's got a little bit of teeth on there. So market goes down 20%, you're up $11,000. If the VIX goes up to that 60 number, if you're $11,000. So it by itself has a little bit of teeth. I was thinking about doing that. And then I've got some other things that have come to me. And I think this is kind of so what we basically did is I basically threw all the junk that I said on Friday away. I said, wait a minute, we're not going back to 2016. We're not going back to 2016. We're going to keep the plan that we've got. And we're going to maybe trim it up just a little bit. And so what we're doing, let's go back here. So analysis tool is something that we're going to implement to make sure we're not taking up too much risk, right? We're going to do maybe instead of a 111 or a 112, you can do a 1122 or a 1111 and buy just a little bit of protection down there, just that little bit of put. Now, the cool thing about that little put, now watch this. After 21 days, or after, whatever, after what, 90 days, 100 days or so, we're going to close the naked put, right? That's the general plan, is to close it at 21 days, close that naked put at 21 days. Well, if I've still got this little cheap put on there, he's still working for me. So he's still working for me at 21 days. Now, what does the 2,800 look like at 21 days of protection? Let's just see what he looks like. So let's go down here. Remember the 2,800, and let's go to trade, and let's go down to 21 days, and let's see if he's any protection to us at all by himself. So we'll go down to 21 days. Shut up! So we got 22 days here. Let's go find the 2,800 put. He doesn't look that big at all, big and bad. Well, let's see if he's got any punch to him at all. Let's analyze this trade at 25. Let's see, ES. Give me a second. This is good stuff. Oh, and I want to thank y'all on YouTube that have been so nice and have said, Bobby, listen, it's tough. I'm glad you're still here. I'm glad that you're the only one that shows us how much money you lost, and all the rest of them aren't showing it. And then there's some ugly ones on here that are just saying hateful things to me. And I'm like, come on, man. If you can't say something nice, don't say nothing at all, right? We realized we had not a blowout, but we had a serious injury. Now we're trying to figure out how to work this thing and how to fix it. So let's move this down to one contract, 3, 2, 1, and see if we've got any punch in this little option. Hold on a second. So let's take this one out. All right, and we've only got little dude here. Let's see if little dude's got a punch to him now. If we had that same little thing, he doesn't have much of a punch to him, but by himself with a 5% down move with VIX going up to 60, he gives us $919. Let's see what he does on a 20% down move. Okay, he's got a little bit of punch to him. He's got, between $2,000 and $2,700 worth of punch to him. So that's one thing that we could do and just give a little bit of a put that would give us another thing. So the other thing that I thought is this. The optional hedging things that we have, the optional hedging is maybe do some of those things. You know, Candy said that the VIX hedge did wonderful during the thing. So maybe we look at putting the VIX hedge. Now, the VIX hedge is going to cost you 3% a year of your net leg. God, I wish I'd had it in place, though, don't y'all? Don't you wish that that was in place? If you're up 20% on the year, could you not afford to do 3% a year to the VIX hedge? We've got the put ladder hedge, which also uses 3% a year, but I don't think we need that, and I'm going to tell you why. So I'm going to give a thing to this, and the put ladder was where we go. I don't think we need this, because this is where we would go out and we would buy 14-day puts, and we'd use 3% per year. Now, looking back, you wish you had that too, right? If we'd only used 6% a year and we'd had up to 40% returns, we would have been good. But here's what I'm thinking. On top, it's not your fault. Why would anyone blame you for taking their own risk? Markets do what markets do. Yeah, and markets did this, Paul. It really did, and it was horrendous. It was a horrible day for many of us. But let's lose the money, don't lose the lesson. Let's try to make this thing a little bit safer. So the first thing I think we can do is we can buy a cheap put. It's going to take your returns down a little bit, but that gives us a little bit of protection. And I showed y'all that initially, if it works out, that thing makes like a $6,000 difference buying a cheap put. We could do the VIX hedge, 3% a year, which seems very, very good now. And on my VIX hedge write-up, I said it's a good time to put it on. It's when VIX is less than 20. And I'll be dang, VIX was less than 20. It was a great time to have it on. VIX is right at 20 now. So it's kind of on the borderline if you put it on or not, but you certainly could. The put ladder, I don't think we need to put ladder because there's something else that we can do. And I think I saw Lance mention this as well. But one other thing that I'm looking at is the put debit spread. What would be cool is if we close the short put of the put debit spread. And I'm thinking maybe we do it in place of this put ladder thing here, that we do it at about the 14 DTE. So let's look at that for a second. Let's look and see what that looks like. You know, I apologize. Oh my God. For the love of God, will you shut up? All right, so let's go and let's pretend we were doing the put debit spread. So 109, 130, we probably go to this December 24, we go to 130, and we would do our put debit spread at where we normally do it. We do the 25%, we would buy this one, right? And we would sell the 5,100. All right, so y'all remember the 5,100 is at 98.21, 98.25. Remember the 5,100. Let me write this down. 5,100, 98.25. 5,100. Come here, little fella. 5,100 is at 98.25. Okay. Let's see what this 5,100 put is at 14 days. Okay. So let's go back. Let's find Mr. 5,100 at 14 days. So we'll go down here till we get to 14. Here we are. 5,100. If we were to buy back Mr. 5,100, God, he's expensive now, but I think it's expensive now because volatility is up, right? But we buy him back at 13.50, right? Which would leave us 13.50. Let's see. So 98.25. 98.25. In real world, I think it's going to be less than that. but 5,100 is minus 1,350. Shut up, River. Is 84.75. That's the profit we made on that, divided by 98.25. That thing is 86. Let's just round up and say he's going to be 90% profitable at that point. And that leaves you, what does that leave you with? That leaves us with the 5,100. So that leaves us with the 5,150 long put. Everybody with me? 5,150 long put. Let's look at him for 14 days. Analyze trade. 5,150. Let's go to ES. And let's find Mr. 5,150 here. Not 10 of them. I got to change my order thing here. All right, so let's undo him. And let's do the 5,150. And let's see what kind of protection we get for that 14 days. So instead of, God, that looks good. Instead of, yeah, look at this. So now if you get a 5% down move, my God, look at this. That is at 60, that's a $14,000 move. If we get the 20% move, this is a nice little put here, y'all. Look at this at $43,000. If we had a 20% down move and VIX went normally like it would instead of this Bombmageddon thing that freaked us all out, then you'd make $43,000. Yes, and yes, Mike, I'm still planning on continuing the Sweet Bobby hedge. So now what I'm thinking is this, y'all. And y'all correct me if I'm wrong, or y'all think this is crazy. Let me go through the steps. We're going to keep the whole plan. Keep the whole dang plan that we had going into that day. Keep the whole plan. One, we might buy a cheap put. Just a little cheap one. When we put the order on. So in other words, we might go into a 1-1-1-1. Okay. Now, does that do a lot? Not a little bit, but we did see on the 20% move, it's a $6,000 difference. Okay. So that's kind of cool by buying that little cheap put. The second thing that we're going to do is I think we might implement the VIX hedge. Now, the reason that I think we can do that is because we were up 20% on the year. I think we can spend 3% for a VIX hedge. We're going to continue the whole plan of the BSH, but we're going to size accordingly. And the cool part of this is once we close this put at 21 days, we're left with a long put. Or I would even say this, because we got on a long put, maybe we let these things go to expiration. Which is what some of you guys have been saying anyway. This thing works best when you let that thing go to expiration. And the fourth thing is we close the short put of the PDS. I did look into the Dr. Z BSH version. I think it's fine. I don't know that it's something that I need to necessarily implement, but I think it's a fine hedge. I think it's fine. It's just got one too many working parts for me in it though. I mean, I think it's good. Yeah, it worked out really good. But I think y'all, we just need tweaking. We don't need to throw the baby out with the bathwater. And that's what I was basically doing the other day. Basically the other day, I was throwing the baby out with the bathwater. I think we need to keep the whole plan. Maybe buy a little cheap put when we're doing the thing initially. It doesn't do a lot, but it does a little something. I would think we showed that it would help $6,000 worth on the downside. You're still going to have big moves down. Maybe we implement the VIX hedge. We keep the Black Swan hedge going, sizing accordingly. So that should be free. So really, this is a 3%. Problem is, this is going to cut into our profits a little bit by buying a little bit of a cheap put. Okay, so big deal. It does a little bit, but then we get that little bit of protection after we close the naked put at 21 days. Or you could say, hey, since I've got that on, I may take it to expiration. No big deal, and that gives you a little extra there. We'll do the BSH, and we'll close the short put of the put debit spread. I like what Auction said. Auction says, I think gradually this will evolve into buy the damn spy and call it a day. You may be right. But I mean, we had the plan, y'all. We had the plan. We were on track for 40%. Let's don't look at that. I mean, let's look at how great we were doing. I just don't think we need to make many changes to it. Keep the darn plan. Or hey, how about this? Just keep it like it was. And keep an eye on your analysis tool. Okay, so for example, clear as mud. Exactly. What's this, y'all? So today is Monday. So let's pretend that we didn't have Bombageddon and we didn't have all the severe losses that we had. So let's go and let's look and let's just do our little spreadsheet like we normally do. So let's bring in our spreadsheet here. Got our little spreadsheet. And let's get Rico and the band fired up. So today is 8/12/24. Yes, I did start over because I didn't want to see it. And let's see what our net lick is today. I know it's down. Let's see. We are at 76,271. 76,271. 76,271. Point something another. Anyway, that's close enough. Down a little bit. Now let's go and do our Greeks and ratios. So let's see, it's this account right here. And let's just do him all by himself. So we are -12, -23. Now we definitely don't like that -23 theta. -12, -23, -12, -23. And VIX is at 19. Bastard VIX. All right, 19. And our buying power usage is a piddly, not much at all. Let's see. Let's go to positions. We'll go here. We'll go cap requirement. We'll go to here. And ES is 1585. That's all of our thing. Now remember, we were going to use this one, initial requirement. No more calls, man. Screw the calls. We know better than that. Y'all should have smacked me back. Buying back the short of the PDS will cut in a majority of our profit, won't it? Well, how much did that cost us a while ago? We were buying which one was it? The 5100, 5150? How much did that cost? 5150, $18. Oh, that does look rad. Let's see. Yeah, how much does that cost? Confirm and send. Oh, we won't. Yeah, you're right. We won't do that. Screw that. $901. Very good. Yeah, you're right, Chain. That doesn't make sense. Even though you get a strong little puppy here, though, boy, you do get a strong little puppy here. Yeah, I think you're right. Let's don't do that. So let's go back. And we're going to use whichever one of these is worse. The initial requirement is 1381. My requirement right now is 1585. So I'm going to use the 1585 to be more conservative. All right. Now, what we need to do now is look at this risk analysis. And let's do points 40. That would be the VIX going up 40 from where it is now. We're at 20. That'd be a VIX going up to 60. And if we go down to this, let's say I've got can't believe I've got cars on. But this would be us making $29,428 if we had a 20% move to the downside. So let's now go and say, hey, let's do a 1-1-1 like we typically would. So let's go to trade ES. Well, I say ES, but what is my, I bet my thing is now saying I need to trade MES. 0.62 every week. Yeah. So hold on a second. Let's see if this was 450. $370 and VIX is at 20. So our plan says if VIX is at between 15 and 20, we can use 30% of our buying power. We're going to be more on that than we have ever been. So using 30% of our buying power. So this says 30% of my buying power that I can do about 3.72 of these things per week, right? Of MES. So we could do 4 tranches of MES. So let's see what that looks like. Let's go to MES. And let's go the closest to 120 days. So we got 95 or 129. Let's go to 129. 4 tranches would be 25. Let's just look at it here. And then go down to the 10% probability being in the money. Would be here. Yep. And let's size it accordingly. Let's do 4 of these. Now, hopefully this will work. So now we've got this all teed up, right? Let's go to positions. Let's go to cap requirement again. And where's my little cap requirement thingy here? So this has a little bitty to do over here where it says plus order legs. So let's add order legs from my orders. See, I can do that and still be fully protected to the downside. That's kind of, y'all, that's kind of what we're gonna have to do. Remember that MES was hard to get out of on money, low liquidity. It was, John. It was. But I think I'm gonna be okay. Now, some of y'all will question this too. I think I'd rather do it though with if I've got a hedge to the downside, I'm thinking I'm fine. I won't have those panic moments where I go, oh God, I got to get out. That's my thinking. So that's my justification for leaving it in there. But you're right. The liquidity on it the other day was horrible, horrible. But my hedge will be in VIX and it will be in the other thing. So I think we'll be okay right here, right? Because we're still protected to the downside. Now, I'm probably going to put on enough of these to where this is eventually going to be down, but at least I'll know what the risk is. I won't not look at this ever again and go, oh my, you know, this is $1 million on $100,000 account. I'll never do that again. This is still hedged to the downside. So in that case, I don't even think that I need to buy the one. Let's see what that would do. Let's see. Where'd my orders go? Yeah. I don't think I'll need to buy the 4 to the downside. I think I'll just leave it like this. All right. So
Bobby,
yeah. Hey, Hal.
how often you going to put on a new black swan hedge?
As often as I can organically grow it. So I've already got it on in this account. So I've already got that on there. So I'm waiting now for the down day of 0.4% or more to sell the 4 or to sell the 3 more. But I very well may do the VIX hedge too. Very well may. Let's see what VIX is at 127 days. I'll probably wait. I don't need it now, right? Because my account just showed you that I don't need it now. But maybe in 7 days, a week from today, when that gets down to the 120, shoot, maybe we'll slap this thing back on. Maybe we'll slap that back on. As long as VIX stays down under 20, I'd say maybe we'll do that. But I think keep doing our hedges just like we're doing. But you know, Does anybody have any questions? Don't y'all think this is better than just abandoning the plan and throwing everything out like we did the other day? I just think we just make some tweaks to it. Who's got opinions? Matt, the other day that I brought up calls, you really should have said, Bobby, what are you thinking? What are you doing?
No, Bobby, I think I said in the chat a couple times, this has been one of the most successful trading plans I've had. And then
Yeah.
we got historic VIX spike. Now, one of the things I need to look at in my trading plan is I violated some of the rules on the 2 times getting out. And I did it because I knew it was a VIX spike and I
Yeah.
was so far away from the strikes. I'm like, so I think that's something I'm going to put in mind is like, okay, I'm going to allow for violation of rules if this is a VIX related spike and I'm still 25% away from the strike price. So I think that's part of this. I'm glad we're not abandoning it completely, but that's part of what I'm thinking about now is how do I manage that? And again, getting caught with the naked puts on the hedge. I had 12 of those open or something. That was where I really got hammered.
Yeah. Yeah, good. Yeah, so Brad, you did pretty good though, as I remember, right? You did pretty good. I mean, not as bad as me.
Yeah, I am, as of this morning, I am back to where I started the year and lost all the gains for the year, but the account's intact where it was January 1st.
But you're kind of with me. I mean, we had a successful plan, y'all. I mean, it was doing what it was supposed to do. If we had just hedged just a little bit more and not been so greedy, and said, "Hey, man, I'm up 20% on the year. I could afford to pop on a few more hedges." I think that's where we're at. I think that's where we're at. Yeah, I think Matt Jollywater, I think the main issue on that is make sure your buying power can handle it. That's what pushed a lot of us out because our buying power pushing 100%. Yeah, you're right. You're right. And no, I've not closed the calls yet. God, I feel like I need to though. That was a bad idea. All right, so everybody good? So what does the plan look like now? Well, the plan looks like what it did. Let me show you the updated plan. All right. Let me show you what the changes are. We still think we can make 20% a year. The only thing is we said we're not going up to 50% buying power unless the VIX is over 40. And that does not happen very often, y'all. That does not happen very often. If it's over 40, you can use 50%, but that doesn't stay that long. So right now we're between 15 and 20, which means we can use 30% of our buying power. The components of the strategy still the 111, 112. I may put on here that I have permission, but not an obligation to define the risk and buy, a put, maybe down at 1 delta or so, but I don't have to. We did add this that on the trade entry, it's dependent on your Greeks and trade metrics. Trading platform analysis tools will be utilized to determine overall portfolio risk. So you just got to know what the risk is. We put the Sweet Bobby hedge in there. It said Black Swan hedge, but I changed it to Sweet Bobby hedge. Y'all can change it to whatever you want to. And then optional hedging. We put buying out of the money puts at 14 days to expiration every week. That'll cost you 3% if you want to do that. You don't have to. And then we cut the VIX hedge in there, which will cost you 3% a week. And looking at it back at it now, going, God, Bobby, if you just done that, you selfish SOB, you were so selfish. You thought you were going for 40%. I know it, Matt saying just close those calls. Remember what happened last time you didn't close something that you felt you should have closed? Hey, you're telling me about those 31 puts. I will forever remember those 31 puts. God, if I had just closed those, it was a $200 loser, y'all. $200 loser. That's all I had to do. We did change bill instead of treasury bills. I just said buying bills. Portfolio adjustments and Greeks. Everything looks the same in there. Let's see. We still got the circuit breaker in there. Everything's just the same, other than I may put that if you want to define your risk on the 111 or the 112, you can define your risk. I think this is where we're going, but I want your discussion. Anybody else got discussion on anything? Yeah, I'll post this one. Let me make just let's see. We'll change this to the 12th. We'll change the date to the 12th. I think everything's the same. We're just not going to be as aggressive here. We're not going to be, you can define your risk if you want to. We got all the hedges in here that are optional, but if you feel that you need to put them in, then put them in. I think the plan works good. It's just that we had too much risk. Had way too much risk on. But I will post this today. All right, guys, good discussion. I'll probably go ahead and put in this 111. I want to tell you something. It's a little hard to pull the trigger once you've been bit like this. It's a little hard to just sit there and go, well, I'm going to pull the trigger and just do my tranches like I normally do them. It's, you know, you're a little gun shy. But we had a very, very good plan. We just got to tighten it up a little bit. We got to tighten up the risk management a little bit. I think we're good. All right. I feel a lot better about it. So I hope you have a wonderful, wonderful day. I appreciate and love all of you, and I hope to see you tomorrow.